All right, crude oil for July 9th, 2015. Starting from a monthly, we are, of course, still one-time framing down. Not much has changed since yesterday. Um, we've been one-time framing down the last 3 months. We're back into a 3 to 4 month balance area, which, of course, would indicate the destination is towards about 45, which seems about right. However, throwing a few other tricks into the mix here. I put a Fibonacci on here. We're actually trading right within a buy zone. Um, so we know that many traders are looking at this kind of thing and are possibly looking for, or possibly fighting this move down. And it may be why it's hanging up here. Don't know, but that is something to be aware of, and I think it might lend to being a little bit neutral for the time being until we break below some crucial levels, which I'll get to in a second. On a weekly, leaning towards the bearish side, we do have a gap down. We're one-time framing down, and we have a gap down. Gaps being on a weekly basis will tend to continue. And again, overall, things look bearish, but we are starting to see signs of change on a daily, which I'll get to in a second. But again, you can see a little more clearly how we're back into balance of this, let's see, 5, 10, 12, 13-week trading range. The destination, again, would be right at the $45 a barrel level. But we're kind of hung up right in here. You can see right now price is trading at 8:35 Eastern Time at about 53.16, and it's right in this zone where we've been the last couple of days. And you can see the volume profile here. We do have quite a bit of volume to chew through. This tends to be like barbed wire on the banister. So sliding through here isn't typically easy unless there's tremendous volume and momentum, and it's gotten a little bit hung up here. Moving over to the daily. And again, we're one-time framing down on the larger time frames. However, on the daily, starting to see a sign of change. As of yesterday, we stopped one-time framing down. So as you can see, this green area is the kind of a Fibonacci traditional buy zone for many traders on a longer-term basis from the sharp correction up here. However, we've stopped one-time framing, and the overnight right now we are above yesterday's range. If we stay above that, we'll actually be one-time framing up today. And this level, nobody's really taught me this exactly, but this is sort of my experience with the 23.6 level. I drew a fib from, let me pull this down here, from where we started one-time framing down. From this move down here, we have come back through the 23.6% level, which is a very strong sign of change in my opinion. And a lot of times 38% is going to be resistant. So I'm actually seeing the top. It's very. I love how Fibonacci works. Very. What's the word? Harmonically, or I was thinking of geometrically. Can't think of the word I'm looking for, but it's just beautiful how this 38% landed exactly on the 50% coming the other way. So this acts as resistance, and this acts as support if we get above it. So I'm calling out the 5406 level, which is the 50% level from the up move down, and the 38% level from the down move up. I'm calling 54.06 a go no-go level as far as upside or downside. This could be resistance from where we are now, but once we get above it, now I'm not saying we'll get there today, but I just want you to be aware of that going forward. So I'll flip over the profiles in a second and talk about some scenarios. But while I'm thinking about it, I'm going to throw on another tool I use occasionally to help discern things. I use it a lot on range bars, but at least I have in the past, but I think you might get a kick out of this. So if I draw a trend line, I guess I should start from here, but Yeah, let me just start from here. If I drew a trend line from where we started the one-time framing down, and then I draw a parallel line to that. This actually probably won't be the best example, but it'll make a better example as we go forward in time. Let's see here. All right. I think my computer's running a little bit slower because I'm recording this, running the Zoom and Skype and everything. So just a moment. Wasn't really letting me select it. Okay, for the sake of time, I'm going to maybe go ahead and skip forward. But basically, if I drew a parallel trend line on the outside where we poked out here, and we've broken outside of that, that actually is bullish. If we get outside of this, basically, what would be a little channel. So I'll use that. I'll show that again some other time. It's not that important now, but it'd be very apparent if we get an up bar today, or if we don't continue down. That's what I'm saying. So moving on to the profiles. All right. As you can see, I marked on this chart these levels, and we did come back into that 61.8%. We had a double distribution yesterday. We traded, interestingly enough, quite a bit below that, but we've since trafficked out of that area. We've reclaimed the upper distribution and gone beyond it, and as it stands right now, we would gap up. So instantly, gap rules are in play going forward, at least the next 20 minutes. I still have a base level here. I'm using the top of the J period at 53.20 for the spike that we had on, let's see, what day is today? Thursday. So that would be Wednesday, Tuesday, Monday. Okay, we had the spike on Monday, and this is an area that I'm looking at as a level we want to stay above for upside continuation. But gap rules are in play, which means if we remain above the previous day's range, that's very bullish, and we find acceptance above anywhere from 53.14. I guess I better put another line here. Anywhere from 53.14 to 53.20 is sort of like where the base of the spike would be. That's very bullish. In fact, you might want to use this little area as support if we get above it for some buys. But let's say we do close 53.96. Yeah, I see what you're saying. I actually have that as a spike base up here as well. You can see I'm with you. So we got that, but just one step at a time here as we get. Oops, let me slide this down a bit. Yeah, this is recording kind of slows my computer down a bit. So, all right, wow, we're getting into it now. So we're getting above this level. Again, this is an anomaly, and it's where it really took off down on Monday, and this could be used as a base here. But also up here is probably a little more solid because it's another distribution. So thank you, Michael. That's a good point. We do have a naked POC up here. So again, that could be the destination for correction. And again, that very important 5408 sort of go, no-go level. That's a 38% retracement from the one-time framing down where it would be resistant. So, maybe there's some shorts in here, a bounce, if you will. And once we get above it, some upside continuation. But that's the gap rules to the upside. But the other scenario would be if we close the gap and get some correction in the overnight inventory, which is 100% long. We want to see us get acceptance. Probably, I would say down through into this lower distribution, down below half back from yesterday, before I'd feel really comfortable that there's going to be downside continuation. And also remember, this is very important, if we don't get If we don't get value to unchanged, that would bode well for an afternoon rally or a later rally. This being crude oil, and this is the first time I've really talked about that with crude oil, and it closes at 2:30 Eastern time. That would probably be, I don't know, anywhere from what, 11:30 to 2:30, somewhere in there. So it's a little bit different than the ES where we're looking at afternoon rally, maybe 1:30 to 3 or something like that. So that's the crude oil report for this morning. If anybody has anything to add or any comments, that's great. Otherwise, I'm going to stop the recording and we'll move on to the ES. $54.20 and $56.51. $56.51. It's a ways away. That would close the gap. Okay,